Now, so far you have went through all the oscillators in the past few lessons. So we're going to compare the different oscillators, and then from there we decide which one do you want to use, which one suits your personality better. Alright, so let's get into that. What you've learned so far: RSI, stochastics, and also CCI. So then we'll put these three indicators into one chart so that you get a bigger picture on how is it related to each other, and also how do they interact with each other, and what are the signals that they give or don't give. So you can see in this case, I set all three indicators at 14 so that you get an apple to apple comparison, so that you get a fair comparison. So you can see that I put RSI as 14, stochastics as 14, CCI as 14. So you can see at this point in time, yellow line over here, RSI did not went to the extreme levels, stochastics went to oversold, CCI went a little bit oversold. So in this case, only stochastics and CCI gave us an oversold signal. Now there are some traders who combine two indicators together, for example RSI and stochastics, because they need a lot more confirmation, whereas I feel that it is fine with just using one indicator because most of the time it just gives you the same message anyway. Just that some oscillators give you more signals, some oscillators give you less signals. Okay, so let's move on to the next example. So if you put RSI and stochastics together, compare it again. So stochastics is the one that gives you the oversold signal, and at the same time RSI did not give you any entry signal. And let's look at another example again. So in this case, only CCI gave you a signal, whereas RSI and stochastics, it is still in the neutral level. So another example, you can see a downtrend in euro dollar. RSI did not give you a signal. Again, stochastics did not give you a signal, but CCI gave you a signal. So this for oversold signal when it comes to a downtrend. How about overbought signals? Again, CCI gave you overbought signal, but stochastics and RSI did not give you any overbought signal. So in this case, because in a downtrend, we only look for overbought signals, so you might be able to enter if you use CCI. But if you use RSI and stochastics as a confirmation, you wouldn't get any entry signal. Okay, how about uptrend? For uptrend, remember we are looking for oversold signals for us to enter. So in this case, RSI did not give you a signal, stochastics, CCI gave you a signal. So if you use stochastics, CCI in this case, because there's a confluence here, there's also bullish candlestick signals, and hence you'll be able to enter buy trade if you use stochastics and CCI. But if you use RSI, you wouldn't get an entry signal. So does this mean that stochastics and CCI is better? I'll let you know the answer later. And one thing you need to take note of is that normally you see that CCI would give you an earlier signal as compared to stochastics. So does this mean that CCI is better than stochastics? Again, you know the answer later. But if you have decided that you want to use RSI and you want a little bit more signals, then you can change it to 9, because 14 is just doesn't give you a lot of signals. But does this mean that 9 is better than 14 because it gives you more signals? Later you know the answer, okay? Again, another example. This time RSI, stochastics and CCI gave you an entry signal, all overbought at the same time, okay? And here's where the price tested 100 SMA, gave you a bearish signal, and this is a good entry point, okay? So the best indication that a trade is going to work out is when all three indicators go to overbought. Okay, but does this mean that when all three indicators go to overbought, then for sure it's going to work out? Look at this example. Initially you have a downtrend over here, okay, and RSI, stochastics, CCI went to overbought and it tested this 100 SMA, and yet the price still continued to go up. So the point is, no matter how perfect your trading system is, no matter how many confirmation indicators you use, the trade can still not work out because There's no trading system in this world that is 100% win rate. Okay, just understand that. Doesn't mean that the more momentum oscillators you put in, then you'll always make money. But with that said, the best situation is when all three indicators are telling you the same thing. Okay, so give you another example over here. You have a downtrend and we want to look for overbought signals. By now you should know that the proper way to use momentum oscillators is not just when it goes above to the extreme levels. You want it to go to the extreme levels and then go back to neutral level, okay, which is at this point over here. So the thing is, CCI went to overbought and then came back down to neutral earlier than stochastics, right? So stochastics only came back down over here, whereas CCI came back down over here, which is slightly earlier. So CCI, oftentimes you see that it will give you faster signals and also earlier signals. And the good thing about getting earlier signals is that you can enter at a good risk to reward ratio. And of course, again, RSI, even if you set it to 9, it did not give you any entry signal. So you might be asking, is stochastics CCI better than RSI then? Because RSI doesn't give you a lot of signals. With more signals comes a price. You can see that price came down here, tested 50 SMA. Okay, and then stochastics CCI gave you a signal, oversold signal, which is what we are looking for. And you anticipate that the price is going to bounce off from 50 SMA, but it did not. Instead, if you put your stop loss below 100 SMA or below this swing low, you'll be stopped out. Okay, so in this case, stochastics and CCI is going to cause you to get stopped out, but RSI would have saved you. Do you see that? So RSI only went to oversold right here. You see, while the price tested 200 SMA, can save you from a lot of losses. Because you already know that the more trades you make, the higher chance you're going to get into a losing trade, the higher chance you're going to get into a false signal. And when it comes to divergence wise, you see that you have a downtrend over here, bullish divergence from stochastics, bullish divergence from CCI. But CCI gave you a more obvious bullish divergence. Because if you realize how CCI moves, it tends to be more volatile as compared to stochastics and RSI. So hence, the peaks and the highs would be more obvious. And also, very often times you see that CCI will give you an earlier signal. So this one is a bearish divergence. Now you see that this is the end of the bullish trend over here. If you drew a bearish divergence, you can draw it, but it's not really that obvious. Stochastics did not even give you any bearish divergence signal, but CCI gave you a bearish divergence signal. So in this case, CCI saved your life. Another example over here. So in this case, all three indicators gave you bearish divergence signal, which is pretty obvious, but you realize that CCI gave you an earlier signal, right? So CCI, the first peak is over here. In fact, it's over here if you extend this line. So the first peak is over here. Then this is the second lower high, third lower high. Again, CCI gave you an earlier signal. So let's summarize everything that we have learned and compare these three oscillators properly. Now, when it comes to amount of entry signals, RSI, no matter if you use 14 or 9, it still gives you a low amount of signals. Stochastics, it gives you intermediate amount of signals. CCI slightly more than stochastics. Of course, with a lot of entry signals comes a price. The good thing about RSI is that it will give you very little false signals. And then stochastics intermediate, CCI would have higher false signals. Volatility wise, RSI is lower, stochastics is intermediate, CCI is high. Ease of interpretation actually depends on you. But I find that RSI, CCI is a lot easier because it only has one line, whereas stochastics it has two lines, percentage K, percentage D, which you also need to take note of. Okay. Timing wise, RSI gives you late signals. Stochastics signal is faster than RSI. CCI Normally, not all the time, but normally it is faster and earlier than RSI and stochastics. Okay? Sometimes you find that they'll give the signals all at the same time, but I'm just talking in terms of most of the time. Okay? So RSI hence is suitable for conservative traders, stochastics is suitable for medium risk appetite traders, and CCI is suitable for high risk traders. So a lot of people like to ask me on my YouTube or my email, they just love asking this question: what indicator do you use? Like, this kind of question you should not ask, because this is what dumb traders ask. Like, I might be comfortable with CCI, so I use it more often. But your risk appetite might be lower, you're more conservative, then RSI is more suitable for you. If you go and use CCI, it's going to cause you a lot of stress. So don't be just like those dumb traders, dumb money. The fact that you're attending this course shows that you want to become part of smart money. You want to be a smart trader. And smart traders don't ask stupid questions. Now, is it alright to combine all three together? I don't recommend that. At most, you should just use two, because I don't want your chart to be way too cluttered, and sometimes it is way too redundant to combine all three together, because sometimes CCI is going to give you signal, but RSI is not going to give you signal. Then it's going to make you confused. Should I enter or not? Basically, CCI is going to help you open more trades, but also you're going to face a little bit more losses as compared to if you use RSI. Because when you use RSI, yes, you might have less trades. Yes, you might feel bored using that indicator because you're not opening a lot of trades, but it will save you from getting the false signals. Okay? So if you're somebody who is a long-term trader, you have patience, you don't look at the charts a lot, then RSI will be suitable for you. And if you're somebody who like, fast action, like short-term trading, high volatility, that kind of trading, then CCI should be for you, because you just can't handle having no trades. But personally, I feel that the less trades you make, the more profitable you become, because it's not about the amount of trades you make. It is about the quality of the trades that you make. Some traders I know, they love using CCI. Some traders I know, they just use RSI. Some traders, they just use stochastics. The point is, use whatever that suits your trading personality. Test all these three in demo, and then you start to find out which one is more inside your comfort zone. So with that, I'll talk to you in the next lesson. Bye.